Let me start recording. Shri Guru Bhyo Namaha. Om Shri Ganesaya Namaha. This is Inflapro second part 02. Explanation about Inflapro and demo part 02. This is continuation to previous part 01, and this video will be beneficial to startup in financial services with new ideas. This video may take about 30 minutes. Please watch till the end. Disclaimer. I am bnvenkataraman. This video presentation is for information, educational and estimation purposes only, and not to recommend buy or sell or invest or redeem your funds. Every investment has its own associated risks, and without knowing the risk, don't invest. I am neither an agent nor a broker nor any advisor, simply an analyst with computer background. This software works on Google Chrome, Firefox browsers, and did not work satisfactorily in Microsoft IE Internet Explorer when the software was developed 15 years ago in 2010. Now it is working in Microsoft Edge browsers. Let us go to calculator online and at bnvenkataraman. Anyway. Remark. Still, people don't come out of fixed deposit, insurance, endowment plan, pension by insurance companies for better mutual fund. This session is for such a people to spend a return from such product, not all the pension payout, but save out of the payout to allow it to grow at a phase same as the same scheme, if not better one, to fight inflation. The process is to save more money in first year, comparatively lesser money in the second year, further lesser money in the third year, and so on. The automatic saving is not provided in the current market scenario. A startup entrepreneur can provide this as an automated as per my Inflapro calculations. In conventional monthly income schemes, senior citizen schemes, Prime Minister Vaya Vandana Yojana pension schemes products offer 7.4% return, which is not bad, but to provide for automated saving, one can use BNV's Inflapro as a guideline. Custom menu and interestable. We can see in bnvenkataraman. Let us go to my custom menu and we will be seeing what is option 4. Yes. Here, this is the home page. In this, just the third line in the top, we have number of links, and all this pertain to same program. This line save to come to save program, and click this Inflapro tab or custom. We have seen already what is Inflapro in the last session. We will go to the custom menu directly. See, this is a custom menu. Let us consider 12 lakh rupees principal, 10% inflation protection, and 8% at a monthly scheme. Monthly frequency is monthly compounded, and number of terms 25 years. We have seen the same thing earlier. Now keep all other same, click here to submit. Okay, it's not coming. Again click it, click to submit. Yes, validation is okay, and click here for submit. Click. Okay. See, we can hide this option 2, option 3 correspondingly, and this is the comparative chart. Option 1, if we get fixed pension fixed payout of 8,000 rupees per month, and in option 4 of this Inflapro, the amount starts with approximately 3,000 rupees, 2,972 rupees, and every year it increases, and in the 25th year it is 29,282 or approximately 29,200. The end benefits are same in the option 4 as well as option 1. Option 1 is the conventional one, option 4 is the Inflapro option. This also shows option 7 and option 10. We'll come to that in the next session. Now we can see that the interest is also available as a table here. Say interest is 8% throughout flat, whereas in option 4 it is 2.973 to 29.283. There is approximately 3% to 29% in 25 years with the inflation protection of 10%. With the inflation protection of 10%. We can see the audit table also for this. Anyhow, let us consider another customer for same 25 years instead of monthly and yearly scheme. At the same, click here or click at this one. This also can be clicked, or this can be same. Validation is okay. Validation is for this, whatever input we have given is validated. Click here to submit. Per year it goes so to 96,000 rupees, and on option 4 of the Inflapro, it starts with 35,000 per annum up to 3,46,000, whereas in the conventional one it is fixed, all fixed with 96,000 rupees. That means it is out of 96,000 rupees per month. In the first year you save approximately 60,000 per month. You save approximately 60,000 per month, and allow it to grow at the same rate. You can see the audit table, yearly calculation is there. Audit table, to get audit table, click on the column, in the same column, option 4, any row, any row, you click it and get into the audit table. Audit table, the interest portion is 96,000 rupees, and only payout is only 35,000 rupees in the first year. So that the accumulated amount, see, we started with 12 lakhs rupees, Now the closing balance has become 12,60,000 rupees, which is carried to the next year, and same rate of interest is allowed. Rate of interest is 8%, same 8% is allowed, but out of that, only a part of it is spent by the customer, that means balance is saved, and a closing balance increases. The closing balance increases approximately more than half of the period. So in this particular case, up to 17th year, and afterwards the closing balance diminishes as the fund value diminishes, and because the interest portion is more than interest portion is less than the payout. Payout is more than the interest portion. Therefore, from the capital we are withdrawing. So, let us go back. Let us go to the presentation part of it. We have seen bnvenkataraman and customer page. Now there is a tutorial to explain the same option 4. There is a tutorial. You can click this and view. Of course, this starts with terms used and so on, additional terms, and there is a custom page. Here also there is a custom page similar to what we have seen in the custom page of Inflapro. Similarly, here in the tutorial also there is an Inflapro. Say, to make it same as the custom menu, we'll take the principal as 12 lakh rupees and interest rate as 8% as what we have seen earlier, and term is 25 years. Inflation protection is 10%, and of course there's a no balance. We'll take it as same as last pension. The fixed pension, if it is same as last pension, means it is the principal itself. That is, the post-term return is the maturity, the return of principal submitted. Now we have come across the same as the other, what we have seen in option 4 in the custom menu, with 35,212.05, 35,212.05, same money we get it. And the end result is the same. RO is rounding off 0 to 20 paisa and so on. Here 12 lakh rupees benefit, that is post-term benefit, that is maturity value is 2 lakh rupees. And here the same maturity value is taken in option 4. And then here we have got some graphs. In option 0, or option 1 rather, it is flat rate of 96,000 rupees, therefore it goes here. Then paid option 4. Option 4 is it increases gradually in and crosses to nearly 3,25,000, somewhere in that figure. Option 4 we do not see. There is an audit table. Audit table also provided for option 1 as well as option 4. Audit tables are given here. But this tutorial is for yearly frequency only, yearly compounded only. The tutorial does not provide for monthly. Whereas our custom menu, and the Inflapro custom menu is more elaborate one. Here is available with frequency half yearly, quarterly or monthly. Now let us go back to our presentation part of it. And benefits, important point is benefits. See, We will come to the benefits part of it little later. Then there is a summary for 12 lakh with frequency yearly, 8% return of principal. The summary has been worked out here. This is for 10 years. Okay. Let us see the 10-year calculation. Okay. I will not go to elaborate. We are not going to. We will not spend more time on that. This chart summary is for 10 years term. What we are seeing is for 25 years. For 10 year scheme, it varies from the monthly amount return varies from 63,940, approximately 64,000 rupees up to 1,51,000 rupees in case of option 4. The end benefits are same. Hash total return is different, it is 21.6 lakh and it is 22.1419 lakh in option 4, and yield is another parameter, financial parameter. It is same 8% in the conventional scheme, but it is improved to 8.496, approximately 8.5% in the Inflapro option 4. Benefits of Inflapro. Inflapro benefits are identical to the benefits of uniform rate, example EMI. When we switch it over from diminishing balance method to the EMI at that time in early 1990s in our banking system. The main benefit is inflation protection, which was not available in the uniform rate, fixed uniform rate calculations. Other is customer or investor convenience. We call it customer friendly. The benefits are well explained in the PDF file in link ebook Inflapro. There is project report given by the author in the home page of this bnvenkataraman, also in the tutorials. Link to tutorial is given here as benefit. Benefits are here. Who will be benefited? Investor. By implementation of this Inflapro, benefit to investor is by means of getting inflation protection. One gets a sample case of 20 years pension scheme, 10% per annum rate of interest with 10% inflation protection is after of 6.7% to over 25% in the 20th year. Figures are just indicative. It will be actual figures you can see from the calculations. Investment company. Investment company is benefited with increased holding amount, that is unbalance of principal and unpaid interest amounts. For example, in the case of mentioned in the previous paragraph, the investment company has accrued 1,54,000 rupees in 13th year, which is more than 150% of the present method of equal installment. Investment company is benefited. Investment company as a financier. Even if one assumes that investor is more beneficial or investor is more benefited, the investment company becomes an investor when it comes to the money lending financing. It gets the increased return of income from the amount financed. Borrower. That is investment. Okay. Borrower gets convenience of low payment as compared to equated monthly installments in the present day situation. Of course, it sheds more interest in later years for this convenience. That is in case of loan. In case of pension, it is advantageous to the customer. It is essential to note that borrower's income repayment capacity increases because of inflation. This situation is very identical to the situation changed from diminishing balance method to present day EMI method, of course, in 1990s. There are additional benefits are here and special note to investment company. There is assured increase in balance, which means assured increase in business turnover during the first half of the period, say 10 years to 20 years. To explain this, in typical case of 1 lakh rupees investment, in case of pension payout with 10% inflation, 10% rate interest, the run balance worked out for a case of considered fine, increase to 1.05 lakh in second year and so on, up to rupees 1.54 lakh in the 13th year of the 20-year plan, which means average business increase is 5% without having the need of fresh customer deposit. For any investment company, 10 years is a quite long and comfortable time to increase their business activity to nullify the decrease in their holding in subsequent years of the term. Ultimate beneficiary is the investor. The investment company also becomes the investor when it comes to the business of money lending. The investment company becomes the investor in this case. The investment company will not keep the customer deposit money idle. It has to invest in short-term, long-term projects. The lending rate is always higher compared to deposit rate. Therefore, the investment company gets much more benefit compared to the simple depositor. The investor is motivated to go in for long-term deposit as it attracts more return. This aspect is extremely beneficial to the investment company. In the case of deposit pension plan, if the investor prematurely closes the amount, the investor will be the heavy loser of future returns. The investor will be the heavy loser. Here again, the investment company is benefited. Let us go to our presentation part of it. Link of the benefit we have already seen. Request viewers to use the calculator and use custom choices and also tutorial to explore it. In this video, we had seen the option 1, option 4 of Inflapro and the benefits of Inflapro. It will be useful to startup entrepreneur, but will be informative for others in general, to the public and to the government. Request viewers to subscribe if not already done, like, share to like-minded people. Thanks for watching. Let me close the video. Let me stop recording. Thanks for watching.